There's a lot here that markets are grappling with. What would you say is really driving this negativity we're seeing in tech stocks?
I mean, the key word that jumps out to me in Caroline's comments is just anxiety. We're seeing so much anxiety, of course, around the tech narrative, and that began with DeepSeek and has continued as we continue to see competition coming out of China. But it's also related to the tariff question. And I think when we're thinking about tariffs, we have to acknowledge the fact that this is an area, AI generally, where there's a lot of emphasis on US becoming a superpower. And so that should have some insulation when we think about how the Trump administration is going to approach the semiconductor space and the technology space broadly. At the same time, there's a lot of rumblings around the types of tariffs that we could see on semiconductors, real pressure to build here in the US. And I think when we think about all of these different anxieties, from questions on global competition to questions around tariffs, we have to remember the context that we're in and the valuations that we saw at the start of the year. There was just no room for disappointment or uncertainty. And I think it's that setup that creates the sell-off that we're seeing today.
In many ways, investors have gotten what they wanted. Hyperscalers still plan to invest in more infrastructure. President Trump has been supportive, bringing in more commitments, and you also have demand holding up. But with respect to China as a competitor, we're not going to stop seeing new models coming out of there. What is it going to take for tech stocks to really get the boost that they were getting before, or are those days pretty much over?
Well, my inclination right now, as we think about the CapEx story and we think about the spending from hyperscalers, that expectation of the hyperscaler demand is in the prices right now. The infrastructure build is in the prices. And I think what we'll have to see when it comes to technology and a renewed strength and performance is really that pivot from building the infrastructure to seeing the demand. And we see that dichotomy so far in market movement thus far in 2025. So, for example, Meta has had a very different run than some of these other players. And one of the explanations could be the way that they've been able to integrate AI and take advantage of AI on the revenue side. And so I think it's that revenue narrative that's really the act two of this AI play. And we really need to move to that act two, and my estimation, for us to see prices move higher from here.
The act two, we had other investors or indeed market participants come on and think Act 2 really gets reignited as and when NVIDIA's GPUs and the latest Blackwell chipsets are flying off the shelves. We really see the proof in them being sold and used, and ultimately that'll kickstart once again the growth in this industry. Are you anticipating it being a second half kind of a pivot point?
It seems like there's room for the narrative to shift in the second half. I think the timing, though, is particularly tricky. We have some sense of that from kind of expectations around Blackwell, but in terms of broad use case of AI, corporate spending on AI, I think that timing is especially tricky in this environment in particular, as we think about an environment where there may be a hesitancy on corporations to really extend into long-term investment opportunities that could potentially pull back demand for some of the AI applications that we'd really like to see be part of that Act 2. And that makes the timing maybe a little bit more in question than we would otherwise like. And perhaps it's that uncertainty that is also helping drive prices lower.
In this uncertainty, then, should people sit on their hands?
Well, I'm looking at this, as I'm looking at valuations and expecting this sell-off to really show up in valuations. But if I'm looking at technology broadly, the sector still looks on a historical basis to be in one of the more expensive deciles from a price to expected earnings standpoint. So though we've had this sell-off, we haven't seen valuations move that much. I wouldn't consider now to be a time to be selling technology, but to me, it's more of a hold environment. If it's sized appropriately in a portfolio, to hang on to it, but it's not necessarily a buying opportunity now. I think we'll really have to see a little bit more froth come out of those valuations to make a really justifiable argument to move in.
Marta, one of the other things that we're seeing now is perhaps more discernment among investors for companies that aren't as diversified. Do you see that's going to be a longer lasting trend?
Well, I think that's a possibility. I mean, a related topic that is, of course, top of mind for people is moving from the picks and shovels to those who are putting AI to use in their businesses, the softwares and the like. I think in this environment, that uncertainty is going to cast kind of a shadow over that play as well. But to the extent that valuations are more approachable, I don't know if that's a bad, decision to have some of that exposure in the portfolios as well.